Hi everyone, and thanks for checking out my channel. I'm going to have a look now at natural gas for also looking at potential plan moving forward. Still having the same bearish bias that I had said we actually reached the top and did actually break at $2.70. That's big inverted cup handle pattern that's been now moving inside some sort of a downtrend channel, and if we look on the daily here, the target is still unchanged. I'm looking at 2.15 as a low for that swing, and now we can see some potential continuation. We broke through the 200 MA, which is very likely to see some more move to the downside. We're also having the 20 MA that is actually capping any attempt to break higher, and we're having that descending triangle onto the 2.42 support that will definitely be seeing more pressure in the coming days and weeks until we actually get to a lower point. We're looking here at end of April, seems quite realistic. Should that be the floor, then we will see some likely accumulation happening above 2.15 for some breakthrough during summer. I think the most critical point on natural gas will be the potential supply disruption by a very active cyclonic summer, which is of course possible. Should that not be the case, then we could see the price dropping below 2.15, but yeah, that's still not really the plan for now. Let's have a look in more details about the quote report. So if we look now on the 4 hours, we can see the head and shoulder pattern that's forming quite nicely now. Just right here, left shoulder, head, and now forming the right shoulder. So of course that can still continue to last a little bit longer. We're still having the capping at the top is now moving lower and lower, 2.56. I really doubt at this point we're going to break above 2.458, whatever is happening next. If we take this and look for the target for that move and consider that low here on the break, we're looking at 2.24. That one is giving us a target for next week actually, so that could actually come very quickly. Should we actually break that level 2.42, 2.25, then we can expect some bounce here, retest of the previous support before we actually get lower. So there's a potential for profit taken on the short position at 2.25, kind of depending on the fundamentals we're going to get around there, depending also on the technicals. Should we actually make some major divergence here that's pointing to a retest of that level, that would be worth taking profit, re-entering position at 2.45, potentially even 2.50, as we know that usually natural gas tends to correct quite, pull back quite sharply in both directions, up and down. So yeah, if we look at the quote report, extremely bearish. We're having the managed money unloading the or loading actually short position, reducing long. We're having the swap dealers reducing their short exposure as well, so they're not hedging against a higher price. We're having, it does happen quite often, retail traders trading against the trend and loading long as we are breaking lower, and we can see a very strong open interest as well that is pointing to continuation to the downside. So on that move, we went from 2.64 down to 2.46, so that's a significant drop during that period, and with such a strong open interest and having the retail traders actually going against the floor will actually likely feed the move for a break lower. It did happen a couple of times in the past, so I don't see why currently, with the current economic environment and everything like this, we would see anything different. If we look at the trend longer time frame, we can see management did already reduce their position quite neutral now, so they're holding same amount of long and short position, but they usually tend to overshoot to the other side as well. Slightly, and we can see they can drop easily to minus 100,000, but that can also, depending, some longer term. Yeah, we had some drop much lower, but I think that kind of massive short exposure is probably not likely to happen at the moment. The main reason longer term I think is supporting natural gas and oil is that investment on this market is getting really difficult to get from the banks. So of course that will reduce the prospect, that will reduce the investment and everything. So the production is very unlikely to spike, especially even on natural gas in the coming months. So that's definitely will put a floor to the price. That's the reason why I'll be interested in building long position on that 2.15 level, but that will of course depend on the technicals and how we go until then. So we're not there yet. Let's wait for that swing to the downside to be complete and then think about opening long when we'll get there. So thanks for watching, safe trading as usual, and I speak to you soon. Cheers, bye.